What do you see forward? I mean, just an open question to start our conversation. What's the view forward for M&A? We got to get it done by the end of the year. Is that out there?
Well, there is a sense that things better get done pretty soon. One of the things about last year or so, there's been all this ambiguity about tax policy here, and the U.S. is normally about 2/3 of all global M&A. That really had a dampening effect. There are other effects, of course. General political circumstance,
right,
that affects people's outlook in general. But the uncertainty about tax and whether we'd have a so-called border adjustment tax, whether interest would become not deductible, all those kinds of things, they really put the brakes on things. So through the third quarter, while the number of deals is pretty much the same, the value's down significantly.
I see in retail the challenges of Nordstrom's. That's out in the media today of constructing that transaction. I don't know if you're involved in Nordstrom's. I don't want to get you in trouble here. But in general, is there just money up to our eyeballs waiting to be put to work?
There's still lots of money. The Fed, what's the 10-year? Floated between 210 and 240 all year, something like that?
He wants a free, excuse me. And now, folks, a briefing from UniCredit to Jones Day. Send the invoice. Where's the 10-year and what's it going to do?
Has been floating between 210 and 240.
Okay, good. That was $10,000 right there under MiFID II. That was a MiFID II conversation. Francine, jump in here with a MiFID III conversation.
All right, let's talk about MiFID IV. We're jumping ahead. Bob, what will it take for actually, first of all, companies to do good M&A? Do you make a difference between good M&A, which is when you see value because you're expecting growth to increase significantly, and I would call the bad M&A the one that it's because you kind of want market share to be able to negotiate better?
Well, people do M&A. They think it's all good M&A. Of course they do, or else they wouldn't do it. It is, the fuelant has been, so to speak, low interest rates and low growth. And what corporates can do, of course, is synergize. Even the private equity firms are starting to do that. They're doing add-ons and tuck-ins and all those kinds of things. Because if you pay a 10 multiple for something, you save $50 million of costs, you've created, at least as a matter of financial theory, $500 million, 10 times 50. So the synergies are still there, and as long as money's cheap and growth is slow, well, we're going to have M&A.